Warner Brothers Discovery out with quarterly results, adjusted earnings slightly short of street forecast, but the company turned around prior losses in its streaming business, reporting a profitable quarter. Joining us now for an exclusive interview, David Zaslav, Warner Brothers Discovery CEO. I looked at the stock, not a lot going on, nothing like Paramount Global, which I don't know whether you noticed yesterday.
We all have a lot going on.
But after seeing that, I was interested in how WBD was going to perform in relation to that. And at least as far as streaming goes, it's like a pretty big difference in what you've been able to accomplish. And I've read the articles in the Wall Street Journal, sort of accolades saying you realized something a year ago with streaming, and now everyone is coming around to the same realization. I don't know whether I'd say it's not everything it's cracked up to be, but certainly there are very high hopes for it, and you need to be more realistic near term.
Well, look, streaming is a tough business, and we had a different idea. Our streaming business should stand alone, and it should be profitable and meaningfully profitable. We have the largest TV library, largest motion picture library. We have global content, and our streaming business was losing a lot of money. So this was a meaningful turn for us. Right. We made $50 million in EBIT on our streaming business this quarter. We said that the streaming business would be profitable next year, right, and we announced today that our streaming business will be profitable this year in the U.S. And so our U.S. streaming business is no longer a bleeder, which is a big deal. And on the other side of the ledger, our focus has been, if we have some of the greatest IP in the world, and we're a global diversified company, we need to generate free cash flow. We have a fair amount of debt. We're converting that debt to equity by paying it down. And so we're on track to meet our free cash flow numbers for this year. So by the end of the year, we'll be below 4 times levered. And
are you still on track? So end of 24, you're supposed to be down under 3, right? 2.5? That's where you want to be?
We'll be less than 4 times levered this year.
Okay.
And then our goal is to continue to delever, which we will. This company has real free cash flow. We're a diversified company. We have our streaming business in the U.S., which is now profitable. We're going to roll that out around the world. And then we have our traditional business. We're the largest maker of content in the world. Our Warner Brothers TV business generates over 110 of the shows, Shrinking and Abbott Elementary. So, look, it's a very difficult time in this business. The advertising market is a challenge. We expected it would be, but we've been hyper-focused on our balance sheet and hyper-focused on taking advantage of the fact that we have great content.
Big news right now in the media landscape in Hollywood is the writer's strike.
Right.
How do you think that you just talked about all the great programming you have. How do you think the writer's strike is going to impact you? There's some people who could argue that could from a profit perspective, be actually quite beneficial, at least temporarily.
Well, look, we're a pure storytelling company, and we've been fighting to get the greatest creatives to come work at Warner Brothers. We have all the assets. We got this incredible library of IP. We have a diversified portfolio. In order to create great storytelling, we need great writers.
Right.
And we need the whole industry to work together. And everybody deserves to be paid fairly. So our number one focus is, let's try and get this resolved. Let's do it in a way that the writers feel that they're valued, which they are, and they're compensated fairly. And then off we go. Let's tell great stories together.
You're too late for the strike, I think. It would have been nicer when we thought that we were going to grow forever in terms of content and streaming. I thought it was like the greatest time in the world to be a writer like a year and a half ago. Now, things are tight now, are they not? And we got a recession perhaps on the horizon. Tough time to be negotiating.
Well, the advertising market is tough, but people are consuming more content than they ever have.
Right.
The quality of the writers and the storytelling is as good or better than it's ever been. And so I think it's a good time to be.
Pointed out some companies are glad that writers are on strike because they don't have to. I mean, it's such a.
Well, the question I think
we're not glad.
We're not glad.
Spending so much money.
Real divide between where the studios are and where the writers are right now. And so what is the trigger that actually puts them back together besides just time?
I think a love for the business and a love for working. We all came into this business because we love storytelling. We want to entertain, and when we're at our best, we get a chance to have an impact on the culture. That's why, almost all of us got into this business, with a lot of sacrifice in order to be part of that journey. And so that's what's going to bring us together.
Becky
has a question.
Becky's got a question for you.
Hi, Becky.
Yeah. Hey, David. Hey, David. Great to see you. Just on the strike, there are a lot of people from Hollywood who actually come out here, too. I was talking to a few of them last night. And the issues around this really have to do with streaming and with digital. And if streaming's not going to be as profitable and the writers now feel like they're not going to get as much of a cut, they're not going to get paid in the same way, is there any flexibility around that? Because the last time the writers went on strike, they were out for 100 days. The terms that they eventually signed were worse than the original offer that had been put on the table. If you're telling us that streaming's not as profitable, but the writers feel like, hey, they're not making the money because they're not getting paid the same way they used to with the repeats or any of the different things that are out there, is there flexibility on that point?
Well, one, we think streaming is going to be very profitable for us. We are unique. We have a lot of scale. We have the largest TV and motion picture library. And we have HBO, some of the greatest creatives, and we have all of our Discovery content. So for us, we think it will be very profitable. We've said we'll make over $1 billion in 25. And so right now we're significantly ahead of where we thought we would be. Having said that, the industry is in the middle of some significant disruption. And people are changing the way they consume content. And so it's very difficult to figure out, how does that work? What's the right value for it? And so I think it's fair that we're trying to figure out, when it was just everyone consumed content on a TV set, and it was a model that existed for 50 years, it was very easy to figure out where's the value and how do we carve it up fairly.